Alrighty, everybody, welcome back to another episode of the Wealth 28 podcast. I am your host, Cypress, joined by my co-host, Mr. Aquaman. And today we are thrilled to be joined by a team that is helping shape the future of decentralized finance, Ellis Network. Ellis Network is a cutting-edge layer one blockchain, for those of you all who don't know, that is on a mission to make crypto simple, built with a revolutionary self-custody design and a universal liquidity layer. Ellis transforms the fragmented Web3 landscape into a unified, secure, and efficient ecosystem. Whether you're a beginner or a seasoned pro, Ellis provides the tools to manage digital assets across multiple chains with ease. At its core, Ellis is creating a self-sustaining, open-source, non-custodial suite of decentralized applications and tools designed to unlock access to financial services for everyone, giving users true financial sovereignty, which we really stand by here in the CYPRX Wealth 28 Club. That means from liquidity mining and simple staking to perpetuals, leveraged LPs, and yield vaults, Ellis is packed with features aimed at maximizing your earning potential, all while keeping your assets secure and under your control. So today we are incredibly excited to dive into this conversation and explore how Ellis is simplifying DeFi, empowering users, and connecting the dots in the Web3 space. So without further ado, let's welcome Asham from Ellis Network to the show. What's going on, brother? How are you today?
Hey, thank you so much for having me. I'm doing great today and excited to be on with you guys.
Sweet, awesome. Did I nail that intro, or how was that?
That was perfect.
Nailed it.
Yeah, you covered everything for Ellis Network. Yeah, so
Sweet,
excited to
man.
be on with you guys. I'm Hisham. I'm co-founder and growth lead for Ellis Network. Got together with the other co-founders to build Ellis Network because we were frustrated DeFi users. We were looking for a much better experience, a place to do everything in one app, and it wasn't built yet. And really the only alternative for people who were looking for that type of experience in a way where they could get up and running really quickly was centralized exchanges. So we recognized this opportunity very early on, that you have 250, 300 million centralized exchange users, but really only about 10 million users in DeFi. And that's a massive asymmetry, but it's also an incredible opportunity for builders in this space that you can actually go and capture those centralized exchange users. So that's what we built at Ellis Network. You'll see that if you were to go on the app, that we basically give you that centralized exchange feel. So you're on there, it feels comfortable. You can understand everything you're doing there. And then you're going to have access to all these great products. It's going to be self-custody. So it's in your own wallet. You're going to get a lot of yield opportunity, get to do a lot of really a wide range of things based on your risk tolerance. You can go super conservative. You can go complete degen with perps trading. So yeah, happy to talk about all of it today.
That's what's up, man. Yeah, really great. I actually really like the fact that you talked about centralized exchange dominance and whatnot, because a lot of people, especially considering some of the new features that you guys recently just introduced to the platform surrounding XRP, for example, especially in the XRP community, a lot of individuals don't understand that the vast amount of the market cap for XRP sits dormant on centralized exchanges. And right now, we're kind of seeing this transition where a lot of different protocols, the XRPL EVM sidechain just being released, are all being unlocked. That is going to bring an extra added layer of utility to XRP and XRP holders that is going to take that dormant liquidity and it's going to become active in the DeFi ecosystem. So definitely looking forward to that. And here's a little bit of that post. We'll dive into those features later on today. Aqua, I didn't know if you wanted to kick it off with any questions. I kind of just wanted to start by talking about the services that you guys offer, right? The swaps, different liquidity pools, vaults. There was a podcast that I was listening to, or it was a space that you guys were on with Peersys the other day. And one thing that really interested me, I heard you mention the possible integration of AI managed vaults, if I wasn't mistaken. And if I don't know the vocabulary that you used properly, but it was in a sense of where you're going to have a Bitcoin, ETH, and XRP vault all together, and investors are going to be able to dabble into that. Could you kind of go into detail on some of the features that you guys offer?
Yeah, absolutely. So currently our vaults are just single token vaults. So for example, if you go in and put your XRP in the XRP vault, that is essentially a borrow pool for other users to come in and borrow XRP to take on leverage LP. So you can do a leverage liquidity provision position up to 5 times leverage, and then you would earn the fees from the open interest from that borrow. So interest starts at 12%, and then as that capacity borrowed increases, you'll start to see the interest rate for the borrow go up. That's just a protection mechanism, basically to discourage people once it gets the borrow level becomes too high. That basically discourages you from borrowing too much. So if you're in the vaults right now, you would earn USDC, which is a protocol revenue fee share. You would also earn Eden, which is our secondary staking inflation reward, and then you would earn XRP tokens back into your vaults. So the XRP tokens actually auto compound, the ones that you are earning from the borrows, and then the rest can be claimed. So you can actually just claim those anytime you want from the dashboard. The next version of vaults will allow you to do multiple tokens inside the position. So if you want to basically enter into a strategy where you say, like, I don't really want to hold like 3 or 4 or 5 tokens and constantly trade them around, but I would love to enter into a strategy where somebody's doing it for me or something is doing it for me. So this is where we have the AI managed vault system, or you could have a human curator run it through an AI vault strategy as well. So you could do Bitcoin, Ethereum, and XRP, for example, in a vault, and that curator essentially takes care of rebalancing it and trying to go after a target, like a benchmark or something. So this is pretty exciting for us because what it does is it allows you to kind of let your tokens go to work. So they're going to earn some sort of some opportunity to kind of accrue value, but you're not taking single token risk. So the great part about these vaults is you'll have a lot of different strategies to choose from. For example, one of the ones we're working on is a delta neutral vault. So I know you guys probably maybe touched on this in some of your previous streams, where people who take on perpetual trades often try to go onto 2 different platforms and long it on one platform and short it on another. And they'll do that because they're trying to do a delta neutral strategy where they essentially lay out the same amount of risk. They're essentially hedging themselves, but what they're doing is actually farming the funding rate. So why don't we make that a vault, right? So we decided we could actually build that, and that's where AI comes in. It'll go and find those opportunities for you. So it'll go find it on Hyperliquid or DYDX or Synthetics or GMX or whatever. It'll actually build a delta neutral strategy, farm the funding rate, and put the rewards in the vault for you. So that's another example of some of the things we're going to do with vaults. So to kind of circle back to XRP, though, this has been actually one of the greatest things for Ellis Network because we have a amazing relationship with Pure System, and Pure System has worked incredibly hard to roll out, their XRPL EVM chain. So this really, like to your point, allows some of that dormant XRP that's sitting in centralized exchanges to come over and get put to use. Now you can earn a yield on your XRP. You can provide liquidity. You can put it in a vault. You can perpetual trade it soon when we launch that. So you're gonna have a lot of different opportunities. And my understanding is we already have, from this connection, I believe $100 million worth of XRP has already come over, which is very impressive in just over a week.
Yeah, it's actually really impressive. As a matter of fact, when I saw you guys first launch this vault, I saw it and it was sitting at, I think, $2,500 in TVL. Now there's 23,000, so the TVL is definitely growing. And then also same thing with your leverage LPs and those pools over there. The XRP USD pool as well, in terms of TVL, has grown substantially since you guys first launched that. Yeah, all great things said. I think that the integration of AI, I mean, is it going to be like a AI agent, or is it just going to be some type of like AI integration?
So you can use AI agents. So we're working with Fetch AI right now, and as
Yeah.
well as Akash. Akash uses a large language model that we've been taking an interest in, because right now we have in the bottom right corner an AI chatbot that's we just rolled out. So we're actually using Web3 partners for that, which is pretty exciting. So the chatbot itself, it's just kind of like a customer service, right? So it's a proof of concept. We're kind of getting their feet wet with that. But the actual AI curated vaults will have some agentic properties to it. So essentially, the AI agent will go and find those opportunities, or will suggest yield opportunities. It can be the curator for the vault. If if somebody wants to essentially set different like risk tolerances, it'll go and like maybe try to create that for you. But we do envision, like, maybe in the beginning, it'll probably have like a human manager. So one of the things that we want to do with the first kind of rollout of vaults is we want to find like established fund managers that come from like the TradFi world, or like who have already successfully built funds elsewhere, where they can come with their reputation or credibility and put together like the first few, to give some users some options, maybe like a high yield, a treasury one, a delta neutral one, a large cap crypto one, right? And then basically have those kind of as our starting points, and then it'll be permissionless, so anybody can come in and open up a vault and then try to set a benchmark and then try to attract some deposits into that vault. Now, the other thing too is that we'll cap these vaults, so we'll make sure that there's a limit in how many people can participate in each vault. That way, the rewards don't get diluted across too many users.
Yeah, I love all this, man. Me and Aqua, and especially our team behind the scenes, we've been doing a lot of research with AI agent developments and that whole entire niche category expansion in the Web3 space. I think it's going to be one of the biggest, integral developments in history of crypto. Automated yield strategies through the utilization of AI agent integration is going to be mandatory, in my personal opinion, for survival in the future moving forward, where it's going to be a competitive landscape, and platforms or protocols or networks that have AI agents integrated into their backend infrastructure that allow users to just kind of set, forget, create strategies that are actively managed hands-free with AI agents are going to supersede ones that don't. So that's really cool to hear you guys say that. Aqua, did you have anything that you wanted to chime in with that?
No, nothing just yet. Where I kind of wanted to go with this just real quick, because I know a lot of people in the community are running into like an error when they're trying to test out this XRP vault. And I ran into the same error as well. I feel like this TVL could be much more, but if you can break down like a quick process, if somebody wanted to test out their XRP into this vault, because basically let me give you a little bit back end. I ran into an error and I reached out to the team, and the team had said that the liquidity pool needs to have more liquidity in it in order to lock up more in the vault. And I just wanted to get just some more clarity. And I know everybody that's watching right now probably have the same question if they've tried it, because there is an error. So in other vaults that I've tried, it's, you get in there, you just put it in there. I've never ran into like, oh, you got to fill up the liquidity pool first. So I just kind of wanted to hear like that process and like what it takes to get into one of these vaults.
Right, that's a great question. We are actually going to improve the user interface so that when a vault is at its max capacity, it'll actually mention it, and so that way it'll be obvious like what's happening. So as I mentioned earlier, with our current vault structure, they're borrow pools, right? So people borrow from those vaults to enter into a leverage LP position, which is why it's dependent upon the size of the liquidity pool. So if the liquidity pool is a certain amount, and that means only the vaults can only be a certain percentage relative to that liquidity pool, just to protect the health of the liquidity pool. That way, when people borrow for leverage LP, because they can go up to 5x on leverage LP, we obviously have to have a limitation in place so that it doesn't prevent the liquidity pool itself from being used for swaps, right? So the primary purpose of the liquidity pool for a typical user who comes to the DEX is to swap tokens, right? They want to buy or sell some XRP, and then the liquidity pool serves as an engine for the leverage LP and vaults. So that's why that's happening. So we recognize kind of some of the pain points, right? Since we're just starting out, this has just been live for a little over a week. So we got the feedback from the users, and we're going to put that in shortly. The other thing we're doing right now is working with large like institutional liquidity providers, so we can get that liquidity pool up in the $1 million, $2 million, $5 million range. Once we get it up there with that depth, then the vaults will be pretty much wide open for people to come in. So we're excited to do that. We appreciate kind of the users being like bearing with us right now as we're trying to, bootstrap this, because there have been some challenges that we discovered along the way, especially bringing your XRP over from a centralized exchange isn't the smoothest process in terms of like, having MetaMask snap and then going into Squid Router and then bridging it over and then bringing it into Ellis. So those are things that we are talking to a lot of partners. And actually one of the things we can do with AI, we're talking to like chains like Agoric, for example, where we can take that whole process that kind of seemingly seems like it's just too cumbersome, and change that into like a one-click process to be like, all right, once I send my tokens over to my XRP wallet on MetaMask Snap or XRPL wallet, I want to just move that over in one click to Ellis. So there is the technology exists today, the capability exists today to be able to do that with one click through things like orchestration and interchain accounts, things like that. So we're excited to roll that out. It's going to take some time, but we're going to move fast. We're we take this pretty seriously in terms of like catering to a proper user experience for users, but at the same time we always have to verify the security of our code. So we work with our very reputable partners, Halborn and Hacken, to do our code audits. So we work fast, but we got to keep it secure. So look for those changes coming soon.
Yeah, I'm excited because I got an open bet with Cypress that the TVL is going to go to what number again by October?
I got to look back at our open positions and go over what we think it's going to be by the end of the year. But yeah, I like everything that you said. Just a couple of highlights. That then the fact that you mentioned large liquidity providers, and also I think too that more mature DeFi investors. I mean, even though on the granular scheme is to bring new users into the DeFi ecosystem and to create a user interface that is friendly for both beginners and more advanced DeFi enthusiasts. I think in general, the people that are already in DeFi really appreciate the transparency and the openness to work with people's questions as you progress and as you launch new products. So the fact that you guys are openly communicating, you're willing to jump on calls like this and explain trials and tribulations. It's like people in crypto they don't care if hiccups happen as long as there's transparency behind those hiccups. Like if something happens down the road and there's some type of situation, as long as you can break that down, why that is happening or what's going on, it's like people don't really care, right? As long as they like the product, then everything's fine. So that's great that you kind of broke all that down. I really do appreciate that. Not to solely focus on XRP, but the vast, I'd say majority of mine and Aqua's followers probably hold that digital asset. So I think that a lot of this call today is going to be oriented on that. I wanted to ask you just a general question. With the XRPL EVM sidechain unlocking these new DeFi opportunities for XRP holders and opening up the door for multiple different DeFi protocols and primitives to be launched on XRPL, do you think that the landscape in the near future or even now will become competitive? And if so, where do you see yourselves fitting in and remaining relevant, remaining competitive, to gather some of that market share to unlock dormant XRP?
Yeah, I think this is the start of something really big in crypto when you think about what has just been opened up for users to do with their XRP. So when you think about what XRPL is going to do, we already see, I think a few dozen projects that have launched that to be able to provide yield opportunities for XRP, and that's a good thing. So I don't see that as a threat or a competition or anything that that we would see as something negative for Ellis. We actually think that's very positive. And when you think of how many hundreds of millions or billions was it that you said was of XRP was sitting on centralized exchanges, sitting idle, right?
Yeah, it's about 98%.
98%, right? Yeah. So when you think about that's not going to be one DeFi platform is not going to be able to handle all that, right? So you want to see dozens or hundreds of DeFi opportunities kind of launch with these partners, right? You want to be able to capture this great landscape that is going to open it up for all these users to come in. So the way that we envision this is to build these partnerships with a lot of these other DeFi platforms that are building with XRPL, because we can find some synergies and where we can maybe like our vaults can have like better yield opportunities if we tap into somebody else's platform for this particular yield opportunity, or maybe they see our perpetual features as something that they can't build, so we could, their users could get routed over to us, right? Things like that. Typically, you see this type of relationship in the banking world, or like for example in loans, where like maybe somebody will underwrite a loan, and then another bank will supply the funds for that loan, and then they'll sell the loan over to another bank. So you'll see that like in our like financial system and in the banking industry, a lot of these banks work hand in hand with each other. They don't compete with each other, and there's tens of thousands of them, right? So in the same manner, we're going to see this exact same thing happen with the unlocking of DeFi opportunities with XRPL EVM, or XRPL, I should say, where you're going to be able to have hundreds of these different platforms communicating with each other and allowing like frictionless movement of XRP all over the landscape there. And most importantly, what this does is it gives the user choice, and it gives them an opportunity to find what's really great out there for them to put their hands on. That is where the innovation comes from. When you think about like why haven't we why aren't we, way ahead in this crypto build out? It's just because we haven't been able to get the users in to give the feedback the way that we would normally get it. Like, look at how Robinhood has kind of moved as quickly as they have over the last 5 years. They were able to get a lot of people in and capture a lot of data and get a lot of feedback over those last few years. And look at them now, right? So they're crushing it. And we can do the same thing as users bring their XRP over and start telling all these different DeFi platforms, hey, I'd like to see this user experience get better. I'd like to see you add this button over here on your UI. I'd like to see more yield opportunities if I do this with my XRP, et cetera. And we'll continue to just innovate and make it better. And then, what happens from there is when you have these yield opportunities, then the more money gets generated kind of like in the space, you now are able to tap off and fund more development, right? More apps get built. People come in and say, oh, well, I could build something new. I could build even a gaming platform on here. I could do, some of these other different like niche products that I could, roll out that weren't possible before. So this is the start of something really huge. I mean, I cannot, stress enough. Like this
I agree with you. It's so funny. It's so interesting because I can tell the enthusiasm behind your voice, and I know, it's like, just as an example, right now I have, and it's crazy that a lot of people, there's so much I want to touch on what you just said. But one thing in terms of just the TVL, you're talking about so much money coming in and just the XRP opportunity here, or XRPL opportunity for DeFi primitives. Right now you look at DeFi Llama, and I don't think that this number is accurate to the fullest extent. There's a lot of protocols that aren't tracked right now by DeFi Llama, so we could probably add like another maybe 50 million cap on this. But the total market value locked in DeFi right now on XRPL is 77 million. Whereas if you go look at, the top DeFi, TVL right now on ETH, it's sitting at, I believe, 77 or 72 billion dollars. And so I agree with you 110%. The market share and the possibilities here are endless, and we're at literally ground zero for DeFi capabilities on the XRPL and what's being built out. So it's really great to see. Another thing that you just touched on, and that I really like from builders in this space and people that are actually helping orchestrate this new financial system that we're transitioning into, is this mindset around tribalism. Everybody that I talk to that actually has credentials or is actually building in this space, or is actually putting their foot forward to help this transformation move about, there's no tribalism. Like you just mentioned, working together and building together is what's going to bring adoption and users forward. But like the retail crowd has the opposite mindset. Everybody's so tribal and everybody's so competitive and everybody's so, oh, if you're not in this community, you're not cool. And it's just really great hearing that was your perspective, that it's better to just like, work together on this, and that the opportunity for this is, it's not going to be a competitive landscape because there's so much room for growth. So I really like that you touched on that. Aqua, did you have anything to say on that?
Yeah, no, I mean, what you're basically saying too is, participate so we can get that feedback. The more people that hold XRP, and I'm not saying to deploy every, your whole entire bag, but like you can come over here and play with like $1 just to learn and get, give the feedback that these different protocols need. So I like that you said that, because we've been preaching participate. Don't just hold it, participate, learn what's going on chain and what you could take advantage of once we do have some regulations and some FDIC insurance on your assets. You're going to know exactly what to do. But yeah, that's amazing.
Yeah, I want to actually touch on where we see the space in the next couple of years, user adoption, retail versus institution. We'll come back to that, but real fast, now that we have 1,000 listeners on the call, really do appreciate you guys for tapping in with us today. Just a real quick reset for everyone tuning in. You are listening to Hisham, myself, Aqua, and today we're having a powerful conversation with the team. I see that Max is on the call. I don't know if he's able to talk. Sorry that I didn't introduce. I think he came into the call a little bit late. We're talking to the team from Elias Network, and what they are: next gen layer 1 blockchain that's simplifying DeFi through self-custody, universal liquidity, and a fully decentralized suite of tools aimed at making financial services accessible to all. So for those of you guys tapping in with us late to the call that didn't see the introduction, definitely go give these individuals a follow. We'll give them a shout out at the end so you guys can find all their social media platforms and the proper websites and links, so that way you guys can go to read their documents. You can go look thoroughly through what they're offering. You can do your own research and definitely start to educate yourselves on what these guys are bringing to the table, because it's powerful, right? It's super powerful with everything that's happening in the DeFi space. You do not want to get left behind by not educating yourself, right? Like Aqua just said, even if you guys don't want to go out there and open up test amounts and participate in the DeFi ecosystem, at least start to educate yourself. And that's what we stand by here in the Well 28 Club, is just the empowerment of education. Back to what Asham was talking about just a second ago. You know, I kind of want to talk about the landscape in the next 3 to 5 years, because I always like to have a long-term perspective. And since you're building in this space, it would be nice to hear what your perspective is. How do you envision the DeFi landscape evolving over the next, let's just say 3 to 5 years, 2030 projection between now and then? I just kind of want to hear what you think about that. Why it's so important to be paying attention to DeFi in the now, and where you think the space is headed.
Yeah, that's a great question. I mean, projections out there for like total addressable market are somewhere over $5 trillion, right? For in terms of what can come in based on just what we see with centralized exchanges, and that doesn't even include people who have never touched crypto before, who will probably start to experiment with it or start to learn about it as they kind of as the industry continues to grow and build credibility. I'm glad you mentioned kind of like a little bit of on the regulatory side. That barrier that has kind of been in place for the last several years has been a major problem for builders, for people trying to launch products in various jurisdictions. And when we start to see this regulation start to become more sensible or start to come down, that is great for everybody, right? Because we don't necessarily think that you have to remove regulation entirely, because then it might swing the other way. The pendulum might swing too far the other way in terms of turns into a wild west and bad things start happening, right? So instead, what we want to see is, okay, regulation should be sensible. Like there should be a way for users to be able to at least get to know their team, at least know what they're interacting with, at least have some sort of recourse if something were to go like terribly, right? So I think we're finally like in that common sense zone, which is allowing us to then really go after that 5 trillion addressable market. So when I look out like 5 years, 5 to 10 years even, like I'm seeing not just like the tides are turning in terms of people going, okay, I understand now what I can do with crypto. It's not just currency. It's not just me sending and receiving tokens, kind of like the original Bitcoin kind of philosophy of just using it as a currency. But I can do so much more with it now. I can actually turn it into an income stream for me. So it can be something else I can do while I'm working my job. It can provide me passive income on the side, or I can apply for a loan. I can actually take out a loan using crypto, or I can watch the next version of Netflix that might roll out via crypto. I can do my Call of Duty tournament via Ethereum or via Ripple network, right? I can do so much more. So DeFi is sort of the underlying thing that lives under all of those, because without the decentralized finance kind of baseline or foundation for really every sector within crypto, you don't have those other sectors being built. You need to have a financial engine for that, and that is DeFi. So this is where I think it's going to really explode. And I think at the institutional side, I think you're starting to see a lot of big players getting, they're salivating over this. They understand it. They're like, this is the next frontier. We can get in on this. So the advantage that you have as a retail investor, as an individual investor, is you already know this, and you're not hamstrung by a board of directors. You're not hamstrung by your client list that says, I don't want to go into that yet. They're going to come in later because they have their mandates are different. But you as as an individual investor, you're like, you see this already. You put your hands on it. You know what's good, and so you can actually go in and maybe put like 1% into a certain platform and see how it performs. And you can take different levels of risk, but also manage it in a way that's not going to hurt you. So this is where I see the next 5 years is it's just going to be explosive growth, but we have the advantage kind of, as individual users and investors, because we get to move faster than the institutions on this.
Aquaman, this guy's in the Wealth 28 Club, man. He sounds just like us.
I swear to God, bro.
This is so refreshing, just having other intellectual conversations with people that are operating in this space, because this is exactly what we've been trying to preach. And it's like, it's weird, the mindset that's saturated. To touch on some points that you mentioned, people don't really understand that DeFi, one within itself, adds an extra layer of utility to said digital assets, where you can put assets to work, you can take loans out against, lend, borrow, and it garnishes you the ability to stay in this space, to remain liquid and not transition back to the old outdated fiat garnish system that's like literally going to crap. Everything's transitioning on chain. Stocks are transitioning to being tokenized on chain. Real estate, art, commodities, everything is coming on chain. And it's like, prior to, I'd say, let's say 2023, everybody had this hodl mindset. People that were in the weeds of DeFi understood the power of it, but now people are finally starting to awaken to, what DeFi really offers to the end user. And I think it's only going to become more powerful as time progresses, and as platforms like yourselves continue to grow, TVL increases, more things happen, more regulatory developments unfold in this space that make people more comfortable. But you're right. If you can manage your risk properly, which we've proved here in the Wealth 28 Club community is possible, so you choose to abide by those strategies, those rules, those parameters that you have to set in place for yourself to make sure that you're mitigating risk, it is possible. And like, you're right, we don't have any overhead as a retail investor. You don't have a boss, you don't have a board, you don't have anybody telling you what to do. And the regulatory landscape is becoming a lot better. It's changing. For example, I have this fundamental pulled up here, and I don't know if you wanted to touch on this, Asham, or if this affects you in anywhere, if you have an opinion on this. Let me see if I can share this screen. But the SEC recently, Paul Chair Atkins just recently, I believe it was at the end of May, had a DeFi roundtable summit, and he specifically went in there and mentioned that staking does not classify as a security. Do you have any perspective on the staking guidance that was released by the SEC, and does that, maybe boost your what's the word I'm looking for, your enthusiasm or your optimism about the space and where it's headed in the regulatory environment moving forward?
Yeah, I'm very excited about kind of the overall, message that the SEC has been sending, since the changeover, right? I mean, you're already seeing that instead of approaching it with a blanket kind of dislike or kind of like pointing fingers at everybody in the crypto community as if everybody's up to something nefarious, they are finally realizing they're actually taking the time to talk to founders and talk to users and learn about what's happening, right? There was always a void of information in terms of like why regulators couldn't like understand what we were building. So their threat, the fear that they've always had from the very beginning, is that somehow crypto was some sort of replacement for like what we do in our daily lives in terms of money, right? But what we're finding out is that they're actually coexisting very well, which is why you see this proliferation of stablecoins this year, right? Stablecoins have finally kind of taken center stage, because it's no longer, hey, crypto is fighting against the dollar is going to go to zero, or the yuan or the euro or wherever you live. It's not about that anymore. It's, oh, I can actually take that and put it on chain, and now I have stable coins on chain, and now I can interact, I can do things with it. So to the point of staking, I think the SEC just never really understood anything about proof of work, proof of stake, proof of authority, anything, right? They never understood consensus mechanisms. And now that somebody's actually going and having that conversation with them, which I encourage any builder to basically apply to talk to the SEC. We have applied to talk to the SEC. So we actually sent communications to the SEC about 4 months ago. They wrote back and said, we'll try you later, because they're a little bit busy. But I encourage every builder to reach out to the SEC and actually ask to meet with them so you can get some clarity. But things like staking, if they had maybe had that conversation a few years ago about what the consensus mechanisms actually mean and what they do, and how they kind of support decentralization, this would have never been a battle in the first place. So long overdue. I'm super excited about it, just to see that they're finally like introducing some common sense and thoughtfulness to how they actually view these models. And so it'll continue to get better. We have to have more dialogue. We have to have more, hey, this is not how it works. Like when you hear some somebody in the Senate or Congress say something really disparaging about crypto, it's because they never even attempted to look at it, right? They never even did the homework. They never even read about it. Maybe some staffer put a piece of paper in front of them and they're reading it, right? They have no idea what's happening. And that's the reality. Like, these people have never touched crypto. They never actually did the work to find out what it actually is. But when you do, it just changes the game. It's just like, oh, I get it now. I get what I can do with this. And so we're going to continue to see more of that. And the mindsets are continuing to shift. The sentiment is improving. And you'll always have naysayers. You always have naysayers, right? That's the case with any emerging technology, any industry. But then it's important to remember that those are people who typically have their own agenda that they're trying to push, or they are trying to essentially perpetuate kind of like bad information that they got, which is essentially what happened with the previous SEC chair, right? It was just fed bad information continually and just kind of stood his ground on that position. And look at where it ended up for him, right? He ended up being on the wrong side of history
there. Yeah. I mean, there's so many podcasts that have already been said, so there's no reason to touch on it again. But I think people really lack the understanding of how massive the change in administration is for this space and how it's really propelled this space and the momentum and the optimism in the market moving forward. It's exponential. I mean, just from the people that I discussed, behind the scenes, the people that I know that are in traditional finance, they're like, yeah, man, a switch has been flipped on our back end where we're just having crazy conversations from the top down now instead of from the bottom up, how it used to be. High-end executives and people with actual credentials are now discussing and talking about these things. And I think too, to touch on what you said, people in these traditional financial positions are like people in the Senate or people in Congress or just people at the SEC. Why would they back in the day have been so interested in this technology when they're so accustomed and comfortable in traditional finance? They all have fat pockets. They're all getting paid well. Their traditional investments and stocks in their portfolio, insider market trading is all going well. They all know when the market's going to move and whatnot. Why would they care about this new emerging technology? It wasn't until they realized, oh crap, if we don't catch on, we risk falling or being left behind, that they were like, okay, maybe we should get our stuff together. So at the end of the day, it's great for everybody, both institution and retail, that they're getting their ish together. And I'm super excited as to what the future is going to bring. Speaking of regulatory clarity, since you mentioned it, you guys applied to talk to the SEC. Hearing that, and I know that everybody listening in that taps into the research that we do in this community, because we do very thorough research on the protocols and the platforms and the networks in which we operate in, just having our viewers able to hear that you guys are making an attempt to be compliant with regulators and reach out to them speaks loudly, in my personal opinion, on your behalf. Not only on the longevity that your platform and your network is going to have, but just also in terms of transparency and just being around in this space in the, I guess you could say, position that's going to matter. Being regulatory compliant is going to be very important in the future. So just a quick question, if you can answer, what measures has Ellis taken to stay ahead of the evolving regulatory landscape, if any at all? Is there anything that a DeFi protocol or platform needs to do right now, or that you guys are doing or positioning yourself for in terms of regulatory compliance?
Yeah, I think that's a great question, because we do have to fill in the blanks where there's no actual explicit regulation. We just have to essentially, working with legal teams, essentially go with what passes like a very like strong common sense test in terms of how you're trying to comply with what you think the regulation will be or would have been. So I think that one of the great things about this is you're starting to see like some of the pressure that was being put on Uniswap and some of these other platforms in the past has been dropped. So that helps us. That gives us a little bit more clarity in terms of what we are allowed to offer, what we can't offer. The important thing that we kind of keep in mind is, okay, there's certain jurisdictions where we will just simply not offer our products. So that's in our terms of service, and where you can actually take a look at which countries we do not offer the product in. And that's just strictly, that's very explicit, right? We're just not going to offer there. Where there's like a gray area is where we can offer leverage products, right? Because certain countries have different approaches in terms of, okay, you should be regulated or licensed to offer these products. So where we think we will need to obtain a license to operate, we will pursue that. Where we think that the standards of decentralization are sufficient where we can offer those products, then we will do that as well. So Hyperliquid actually did they just went in head first with this by offering perpetual trading without KYC in the United States. So I think that's they were kind of a pioneer in that. I think that's probably why they've grown as much as they have. They were the first to do it. So as far as we're seeing right now, there's not a whole lot of pushback on that, although we're expecting to hear something one way or another because somebody has to rule on that. So we're kind of we're working with other platforms in the space to figure out, okay, where are you guys going with this? Who are you talking to? Because it is a collaborative effort. So like, for example, if we go to the SEC and maybe somebody's talking to their local, if they're based in the US or talking to, they're at their state level, somebody within that government level, they're a regulator, maybe they're doing it, tackling from that end. Maybe, somebody in Singapore is tackling it from their end, right? And so it's a collaborative effort. So a lot of these DeFi platforms are trying to do the same thing where they're trying to go and just, hey, tell us what the rules are so we can follow them. So it's a dialogue, it's ongoing. We'll continue to do that. We do foresee some sort of probably registration or licensing requirement. I know that one of the things that's been floated from the crypto task force is it'll be based on the size of your DeFi platform. So the smaller ones maybe don't have to do as much, of the work in terms of paperwork or licensing. But as you start to get larger and larger, like if you become a hyperliquid size, then you do need to register or do some sort of licensing or whatever. So that's been proposed, that's been floated right now. That seems to make sense to me, right, in terms of protecting users. So I think that'll we'll likely see some form of that in the future.
Yeah, that's great. I think I really like the fact that just in general, you mentioned that there aren't really any clear rules or guidance. So there's not really anything that you guys can go off of, but you're willing to do so and comply as things change. And I think that that's the most important takeaway from what you just said, right? And being adaptable, being reactive. Just like, I mean, I'm personally an intraday trader in these markets, and I apply the same rules, right? I have to change as the market conditions change. If I'm trying to take leverage buy positions, but the market sentiment is risk off, then I'm going to get wrecked if I can't adjust my strategy and my positioning in the market according to the market conditions. So as long as you can do that, like you said, I think that you guys are going to remain on top, and you guys are going to prevail. You did touch on Aqua. Did you have anything that you wanted to bring up before I jump on something that he mentioned a second ago?
Yeah, I don't know. I guess I'll ask this question. I haven't seen anything. Does Ellis have any type of like patents on your guys' technology right now, or is it kind of like open source type of thing? Or I don't know if you can speak on that.
Yeah, on our GitHub repository, if you're so inclined to actually review our code, it's fully open for anybody to come and take a look at our code. We're audited by Halborn and Hacken again, so you can go through and actually see how our technology works, right? But
Okay.
as far as what we have for proprietary designs, that would be our what we call our smart shielded liquidity pools. So the actual liquidity pools that we use on Ellis Network are licensed by us. They are it's a business source license, so they're essentially cannot be forked or copied for 3 years. After 3 years, we'll open source it. And the reason we do that is because our liquidity pools are significantly different than, let's say, Uniswap or 1inch or Osmosis or any of these other platforms. Those are essentially all like clones of each other, right? Uniswap started it off and then everybody else kind of copied it. Now they've gone through V2, V3, V4, they've added hooks, etc. And that kind of like has allowed like institutions to essentially hook up via APIs, and they can actually do some really advanced stuff. And if you guys are big traders, you probably have used some of this. So for us, we recognize kind of the downfalls of those liquidity pools, which is impermanent loss. If you're a liquidity provider, you typically get harmed by the impermanent loss. And the reason that is because these are automated. Sorry if I'm getting too technical here, but these are automated automated market maker models, which means that anytime somebody swaps tokens into this pool, it actually dislocates the price from the market. It moves the pool back to 50-50 balance. So it has to sell something. When you do a swap in there, it has to rebalance it back to 50-50 every time. So when a user goes in and does that, they're moving the token price off of market. And what that does is how that's expressed is through slippage, right? So when you see a high slippage in a pool, it's because of that dislocation. But on the other side of that, arbitrage traders see that opportunity. They go in, ooh, I can take the other side of this and rebalance the pool, and I can capture that difference. I can capture that slippage for myself. So arbitrage traders do this continually in Uniswap, Osmosis, all these other platforms. They're constantly balancing pools. The problem with that is it's inefficient and it harms liquidity providers. So the way that we built our liquidity pools is that we are Oracle based. So we actually have market prices fed in from very like reliable sources, and then they're verified. And that price data comes in every single block. And so the liquidity pools that we have don't stay at 50-50. So if you look at our liquidity mining page, you'll see that sometimes they go like 55-45, or they go 60-40. And that is because when somebody swaps in and out of our pools, the price of the tokens doesn't change, right? It does not change. Instead, what we rely on is a liquidity provider or a trader to come in and trade back the other direction to bring it back towards 50-50. And we give them what's called a pool balance reward in order to do that. When that happens, the slippage doesn't go to the trader, it goes to the liquidity provider. And that's how we keep liquidity providers in the game. That's our advantage. That's what makes our pool so robust. In fact, I've compared, because I'm a liquidity provider, of course, on Ellis Network, and I provide liquidity in all the major pools on Ellis, and I've watched the token prices jump up and down, and I've watched like my position just stay very, very solid in terms of like how it's earning yield, how it's staying, not, it's essentially very well mitigated against a permanent loss. So I encourage people to check it out, try it out, even if you try it with like $10, $15, $20 or whatever, just to see how your position moves, and open up the same liquidity pool on another, like on a Uniswap or on an Osmosis or whatever, and just watch your two positions and watch how they differ. And you'll see why our technology is so great. So again, in 3 years, we'll open this up to other platforms to be able to copy. We license it now. So if another DeFi platform wants to use it, they can talk to us about licensing it, and we're happy to do it. So so we're not like, hey, it's only ours and nobody can have it. We just want to make sure like, other people that want to use it are doing it correctly, right? And the reason we don't want people forking it is then, if we're constantly like iterating on it and innovating with it. So we need people who are going to copy or fork it today to continue to work with us to make sure that they don't go off the rails with it. So
yeah, it might be different from tomorrow. You guys are building, you guys are.
I love that though.
Yeah, exactly. So so I know I kind of went deep into that one, but it is what makes Ellis sustainable, right? It is what makes us different, and that is our engine for leverage LP. It's our engine for perpetual trading. It's our engine for the first iteration of vaults. And then we're rolling out an order book which won't need those pools. So an order book will be coming in the next quarter, and it will also have prediction markets, which we're pretty excited about, because that really caters to the degens out there. And we love our degens. So when we start adding prediction markets, it'll just allow people to do more things, right, in terms of like the risk that they take. And I know there's been a lot of talk about like how you verify, because of there's accusations of manipulation with Polymarket and things like that in terms of the outcomes, voting on the outcomes. So we're actually right now in the design phase of using AI to verify outcomes rather than a committee. So AI will be our decider, into so to speak, in terms of how we determine outcomes for prediction trading.
Yeah, I feel like you kept apologizing. I feel like our community, the Well 28 Club, the CYPRX community, is probably one of the only communities, if not one of the many on X Live, where you don't have to be sorry for being too technical. I feel like all of our followers are like, yes, a technical person, sweet. So that's awesome.
That's great,
we got another 600 listeners tapping in. I got a couple of more questions and things to bring up. I want to touch back on the security that you guys utilize. Halborn, you said, actually, because I just brought up their website, and I actually like seeing a review directly from Ripple on their website. So I'll touch on that in just a second. But for those of you all listening in, since we have another 600 listeners here, we have today Asham from Ellis Network, which is a next-gen layer 1 blockchain that is simplifying DeFi through self-custody, universal liquidity, and fully decentralized suites of tools aimed at making financial services accessible to all. Here I have a post pulled up on their X profile where they just recently launched a suite of DeFi primitives for XRP holders, where now you can go and you can use your XRP on Ellis Network to swap, to add liquidity to pools, to enter into vault positions, and to use leverage LPs. I believe you guys are going to be launching perpetual trading for XRP soon. Is that something that's coming that users can expect in the near future?
Sorry, I was on mute there. Yeah, absolutely. I mean, so we're going to see a lot more in terms of like our relationships with our audit partners, right? Because we're going to continue to innovate and roll out a lot of new features. We have the the order book, the prediction markets, derivatives trading, the tokenized stocks, RWAs, all of those are coming in our roadmap, as well as the expanded AI vault, security vault. So we continue to have a first, security first focus in terms of how we roll these products out. And our relationship with like a Halborn, for example, has been so valuable in terms of what they bring to the table in their reputation, their credibility. All the different projects you see that are on that list are just amazing, amazing names that they work with, right? And so we're really proud of this relationship because it is our ethos, right? We want to be a trusted partner in this space, and we want to make sure we work with the most trusted people in the space. So we generally love being, working hand in hand with teams that have kind of the years of reputation and are out there sharing the same like vision and goals for this industry. So we're excited to continue to kind of build on that relationship, and I couldn't say enough great things about those guys.
Yeah, they're great here. I think a lot of our viewers really like seeing, organizations that they know are well aware of and trust, mention things like, for example, this individual engineering manager from Ripple mentioned Halborn brought immediate value from day one, rapidly understood the XRP ledger architecture, and delivered clear, actionable insights that strengthen the security of our new features. When people see that and then they see, a network, Alice Network going out, choosing Halborn as their, security audit feature, and they're like, oh, okay, they're trusted by Ripple. It everybody that trusts Ripple that holds XRP and they see that comment, they're like, oh, okay, cool, they're choosing that. Well, then it like establishes a layer of trust, and that's what crypto is pretty much built upon, is trust. If we want to move forward, we want to see more mass adoption. We want to see more users come into the space. Building that layer of trust is extremely important. So that's really cool. Speaking of, is your focus, because we kind of briefly touched on institutions, we talked about, you mentioned the terminology, large liquidity providers. You guys are attempting to tap into large liquidity providers to, increase the TVL on the platform, or on the network. Are you guys more retail focused oriented, or are you guys institutional focused, or both, or for now retail, so on and so forth? I don't know if you want to speak on that lightly.
Yeah, we built it for both, and that's kind of the beauty of the design, is that it has features that institutions can tap directly into, as well as a retail user. So one of the things that we're continuing to kind of add to for the functionality of Ellis is we're expanding our APIs. We're allowing we're integrating with, for example, like a platform called CCXT, which basically allows, like, at the institutional level or large like user level, to be able to tap in some of their bots or some of their other like tools to go and grab data from Ellis Network and then compare it against the other platforms that are hooked up there. And that way their execution can come from like a single source, and then it can just be routed to whichever one gives them the best pricing, right? So Ellis isn't always going to give you the best swap on something, right? Because it depends on what's going on in another platform in terms of their arbitrage opportunity, in terms of the depth of their liquidity, in terms of what if the token's not even offered on a platform, but it's offered on theirs. So people don't want to have to jump between platform to platform to platform to do this. They want a single connection where they can go and have it done automatically for them. So that's one of the ways that we cater to institutions and like high frequency traders, or somebody who's looking for just a quick way to find opportunities on arbitrage or a really great swap, right? So those are the types of things that we think about, is how can we just remove the friction for an institutional user. So another example is, like, we had a meeting yesterday with a very large Ripple holder who custodies their assets with a large institution. And they said that institution does plug into various platforms. So it would be great if Ellis actually went and worked with that institution and just created a pathway for that institution to do their swaps, their staking, their vaults, etc. So that way that user didn't have to kind of like pull funds out of that platform and then move it over to Ellis themselves. So those are the types of things we think about, and we love to hear the feedback from people in terms of how we can remove that friction. That's why we're working on, the better bridging, through Squid Router. That's why we're working with like large players like Anchorage Digital to basically having Ellis Network just directly plugged in. We want to make sure that we cater to both institutions and retail, because at the end of the day, if your product isn't institutional quality, then it's going to be capped, right? It's never going to have an opportunity to kind of like make it to that next level. But if your product is only institutional, then it might be too complex or too unusable for like a retail user. So that's why we kind of like focused on a really, really strong user experience in terms of like our UI. And we're going to continue to make it better. We're going to continue to make it easier. We'll add more like in-app like tutorial functions. We'll add more like explainers in terms of, you know, how things like leverage LP and some of these other complex functions work. But we did build some of the leverage products really to be more catered to institutions. Although we love our DGens that come in and do perps trading. I will touch on like I was just looking at our stats page. So if you go on app.ls.network, which is our app, and you go to the stats section, you can actually see that today we have over 1 million, so 1.15 million in trading volume, which doesn't seem like a lot, like if you compare it against like a Uniswap or something large like that. But for us, that's pretty phenomenal given our age. We're only 6 months old, and the size of our pools are still pretty small. The fact that we have 1 million in trading volume today shows that we do have the best swaps out there, that people do use us because we're a better option for swaps compared to like a Uniswap, for example. So I compare this almost every day. I look at like a swap rate between like selling and buying Bitcoin or Ethereum on Ellis, and we are almost always better than Uniswap. So again, it's about removing the friction, making it easier for that Ethereum user, for example, or that Ripple user to come over and make their swaps, because that when they're able to do that, when that barrier is removed, they can just go and capture that instead of having to worry about the process of how to even come over to Ellis Network.
You just answered so many of my questions that I was going to throw at you in a second in one go. So that was phenomenal. Yeah, that was also great. I mean, that's like the second time that I've heard you say something in comparison to Uniswap, which is just really great to hear, because it's like, you know, innovation is so clutch in this space, especially as new technology continues to evolve. Another thing, I pay attention to key detail. You mentioned a possible integration with Anchorage, and, you know, that's going to be huge if it does take place, or if it's not already taking place. Just that access to institutional custody, and then being able to attach DeFi primitives to those capabilities, massive opportunities underway. What would you say, you know, in terms of just more so looking at retail, what would you say is like the biggest barrier for retail? Like, why do you think so many people, is it mindset? Is it UI? Is it, you know, why do you think so many people are still iffy about DeFi? Or what do you think needs to change in order to really see that mass user adoption of DeFi protocols in this space moving forward?
Yeah, there's so many challenges. I think from the start, they are trying to overcome the negative messaging that they've been fed for the last like 10 years, right? Regarding, oh, you can't trust it. Oh, you know, FTX happened, and then this happened and that happened, right? There's always something that, you know, Luna happened. And so all those different things that kind of like are sitting in the back of their mind are kind of telling them, don't do it, right? So that's a problem, like overcoming just that messaging about, you know, like, oh, DeFi is a scary place, you're going to get wrecked. And of course, like those of us who came in and started self-teaching, right, you know, self-learning, so to speak, in connecting our wallets to shady websites and all that stuff, and then having our wallets drained, we've all been there, right? And so that was the cost of tuition back then. Like we all had to deal with it, and it hurt so much, and it was so frustrating. But the difference is we saw that, and we go, well, that was dumb, I'm not going to do that again. And we would just learn and learn and learn, right? And so, and then we'd eventually graduate to like a Ledger wallet or a Trezor wallet, right? And eventually graduate to, okay, I'm never going to click links, and, you know, this and that, right? So we had to go through like the school of hard knocks to do it ourselves. And that is not something we can expect the next DeFi user to do. That is just insane, right? We did it. We were like kind of pioneers, right? That kind of thing. Like give yourselves a pat on the back if you did all those things. But we can't expect 100 million, 200 million people to come and do the same thing we just did. That was crazy, right? So what we need to do is like essentially wipe all that away and basically say, okay, you can log in with a social account. You can connect, you know, buy a ledger, you can connect. You can just one click this, one click that. You don't have to go to 8 different sites and risk connecting your wallet every time, because, you know, you run the risk again of getting phished or whatever. So instead, here's one app that you can trust. Here's one place that you can go to, connect. It's simple clicks here and there. It's self-custody, so you don't have to worry about the next FTX. And then if you need to cash out, here's a way to get it back to a place where you can off ramp it in on and off ramp it to your bank account, right? So if we can make that a really, really seamless process, as if it's the same thing as somebody logging into their banking app, then we're at least like solving that issue. The next issue we got to solve, of course, is the actual like sustainable yield side of things. So you can't just be a chain that has 100%, staking rewards where you just, keep minting tokens and destroying people, because we tried that in DeFi summer and it worked for like a few months. And then after that, everybody just got destroyed. So again, we can't be like creating like financial mechanisms out of thin air and then hope that they work. The 3D basing and all those crazy things that happened in like 2021. What we need to be doing is taking the very best of like how the financial system works and then putting it on chain. And when we do that, we're now establishing trust. We're now saying, okay, like all these like yield products that you could get in the TradFi world, which were inaccessible because they were only open to like institutional investors and things like that, we're now making it accessible to you, and we're simplifying it. You still take the risk of like whatever that function is, but what we're letting you do is have control of it. So you get to control your financial destiny. So all those things have to happen. It is a very, very difficult task, which is why nobody should do it alone. In terms of like LS Network is not going to carry the weight on its shoulders. We're going to go partner up with everybody who's going to share that. And we're going to go do it on the regulatory side. We're going to do it on the development side. We're going to do it on the community side, the marketing side, right? Everybody has to be a part of this in terms of how we incrementally solve these problems, which is why we love partnering, right? We love like, hey, being like, hey, we're not the best suited to build this particular technology. So it's really great that you guys are building it so we can just tap into it. And that's why we love our relationship with Peer System, the XRPL, connection that's been built. And we're going to continue to like expand those relationships and continue to grow the industry.
Yeah, I couldn't agree more. Security is definitely top of the line, trust top of the line, and then just like you mentioned, to cap on what you said, that UI and just the simplicity of a user that doesn't really know too much about DeFi, not having to take the necessary steps to come in and put all the elbow. I mean, it's kind of crap to say, but most people aren't degens. Most people aren't investors. Most people are just people that are savers. They're like, they just want to save. They want they want something that's super simplistic, that is in a mobile application that they know that they're comfortable with. That's kind of similar to like a banking application, and it's all just one click. And that stuff's complex to build behind the scenes, I'm sure. And we're not quite there yet, but it's great to see people in this space that are building towards that goal of making it simplistic for users to come in, on board, onto a trustworthy platform. At the end of the day, I think that as the regulatory landscape continues to unfold, that'll definitely increase the optimism in the space and the trustworthiness in this space, especially as we see what platforms consolidate, which ones remain regulatory compliant, which ones don't, so we can get a better taste in your mouth. I can agree 110%, and something that I know Aqua himself can also agree on is nobody wants to come in and risk their hard-earned capital up front to play around with these platforms and expose themselves to this learning curve by taking that risk, which is again why we created the Wealth 28 Club in the first place, so that way people can watch us do so, right? We play around with thousands, if not millions of dollars in some cases via some of our mentors in the private Wealth 28 Club, and we record the entire thing, right? I took a really huge loss in our private community the other day, probably one of the biggest losses that I've ever taken in crypto, and I broadcasted the entire thing for our private community so they can see the mistakes that I made, the trials and tribulations that I'm going through, so that they don't have to do that themselves. And I know that so many people appreciate that because they're like, oh crap, I see what you did wrong. Now I know what not to do. And that just adds another layer of, certainty to their strategies and their portfolio, to make sure that there's another layer of protection there to not make the same mistakes that people before them have made. So that's really cool. That's personally, honestly, all that I have. We've been on the call for about an hour. Aqua, I didn't know if you had anything else for Asham today. Before everybody wraps it up though, and if Aqua has any other questions or if you had anything else to say, Asham, I want to just give a shout out to all your platforms, where people can find you, Ellis.network, the Ellis Twitter profile or X profile. So we'll do that in just 1 second. And I'll ask one last question before we tap off. But Aqua, did you have anything else that you wanted to throw before we jump off? We've been on for about an hour now. So
yeah, I got one small question. So when I came aware of Ellis, I would have to say it was in the Leap wallet and the staking opportunity. And then going to the platform, it's the same APR as far as staking your Ellis around 40, 41%. Can you speak to that a little bit? Is that going to be here for the long haul, or is that APR just like this window pocket of time as more liquidity flows in, that's going to throttle down? This is the golden ages type of thing. Take advantage now, not financial advice. Yeah, the mic is yours, brother.
Yeah, absolutely. So with staking, obviously, as a new chain, typically that is what happens. You'll see higher APRs when there's less participants, and then as more participants come in, the staking rewards are distributed and diluted across more people. But with our design, since we have our two different tokens, right? The Ellis token is the standard token for Ellis Network. It's the gas fees. It's the staking token. We then do the staking rewards in Eden, which is our secondary token. That Eden actually is 1-for-1, the same as Ellis. So it'll actually convert to Ellis when you claim it and then redeem it. So, or sorry, claim it and then vest it. When you vest it, it's a 90-day linear vesting. You can then redeem it for Ellis. You can sell it. You could do whatever you want. Stake it again. You could do anything like that. The Eden Boost is just an accounting mechanism. It's just a loyalty program for people who want to keep staking their Eden or Ellis. You'll continue to earn like a little multiplier, which juices your staking rewards just a little bit. So eventually Eden, there's only going to be 50 million Eden total minted. And actually, it's actually less than that. It's closer to 40 million now because we have a deflationary mechanism. So once all that converts to Ellis, Eden actually goes away forever. And it's just going to be all Ellis. Then staking rewards only become USDC. So your rewards in staking are actually just going to be protocol revenue. So that's really the advantage or the utility of the Ellis staking token, is that you get to, when you stake it or you stake Eden, you're actually receiving 25% of protocol fees that are collected, and those get dispersed to you in USDC. So that is why people stake Ellis, is really to earn the USDC rather than to earn more Eden. Eden is kind of more like a farming thing right now. Those APRs will eventually gradually drop over time. We finished inflation by year 4. Our max supply was listed at 200 million. It's now closer to 190 million because of our deflationary mechanisms. We also have a taker fee burn. So every time you make a swap, a tiny portion of that is actually burned, the fees that are collected. So at the end of the day, that's our path to sustainability, is that we reward people in stable coins rather than reward people on our own token, because we know people are going to sell it. So that's why we want you to be like long-term focused. If you want to be a participant of Ellis Network, if you don't want to own the Ellis token, but you want to make some swaps on Ellis, that's great too. You can use USDC for your gas fee. You can use XRP for your gas fee. So there is no requirement to own any Ellis unless you want to be a part of that fee sharing program, which you earn 25%. If you're a liquidity provider, you earn 60%, which is great. So obviously we reward liquidity providers for taking on more, adding their liquidity, taking on more risk. They get a larger fee share. So that's kind of how our staking program works. Again, the staking program will eventually gradually transition to all USDC reward program, which is how people are going to be able to stay in the game for essentially, for the long term, rather than have to worry about waking up one day and, oh, the token like crashed or whatever. They're not worried about that. They get their USDC. They know what it's worth. They can do other great things with it. And to your point, CYPRX, the USDC vault, when you're talking about people who are looking to like maybe some kind of safe, place to hang out, that APR, if you look at that tooltip, if you look at the breakdown of that tooltip, if you hover or click it or hover over the APR tooltip right next to the APR there, you can actually see our USDC APR is 13%. So we are like triple that of a high yield savings account right now, where you can just park your USDC tokens and that's what you get in the vault. And the reason that is so high is you can see the capacity borrowed is almost 55%. So people are paying up to 25% interest to borrow USDC for leverage LP. Now, granted, this number will move up and down based on how much risk people are taking in the borrows, but this has been our best product, believe it or not, at Ellis Network, and it's the safe. It's the most conservative strategy of any of the strategies we have on Ellis. This is where people are going. So we're starting to understand a lot more about investor behavior, because we really thought more people would want to go on the perp side, but it turns out most people actually want to hang out in a place that's kind of safe, and it ends up being pretty lucrative for them. So again, perps will be launching for everybody in just maybe a couple weeks. Right now, it's just open to like about 130 testers. But just with those 130 testers and us seeing like 1 million in volume today, is already kind of giving us a taste of like what's going to come when we open it up and actually, build up those liquidity pools, open up perps for XRP, Ethereum, and the rest. So pretty excited to see what's coming. And this is your opportunity. You guys are getting in while we're still young and still early in our development. If you guys want to support us in terms of giving us your feedback, that's better to me than an investment, in my opinion. Like, your feedback is more important to me than your money. So please do, reach out to me anytime, and I'll personally respond.
Yeah, for sure. That's absolutely phenomenal. I'm going to be honest with you. I really like the fact that you mentioned the ideology behind a high yield savings account. I think a lot of people that aren't, studying DeFi right now and really understanding the opportunities at hand to, let's say, for example, we do experience a nasty, nasty bull run. What are people going to do with that capital once they take profit? Having that profit taking in stable coins generating yield, maybe possibly while you're waiting for a pullback to reposition into the markets, and the whole entire time that capital was earning 13%, seems absolutely phenomenal to me, and is a strategy that I'm personally participating in. Actually, the vast majority of a portion of my DeFi portfolio is sitting right now in liquidity pools with 2 stable coins in them, or a vault, not on Ellis right now, but on other platforms that are earning upwards of anywhere between 9 to 15%, depending on the fluctuations of the yield on that given day. And it's been printing, and it's a stable coin, so you're not dealing with the volatility of the asset, and you're just collecting rewards. And people got to understand the power of compound, right? Compounding every single day. It's DeFi, so you're getting paid out if you want to every single second. But at the end of every single day, just taking those rewards, compounding them back into your account, the snowball effect is immense here in the DeFi ecosystem. And like you said, people that are getting into this opportunity early enough are going to see exponential growth in their portfolio. So they choose to make sure that they're mitigating their risk properly, taking the right approach to managing their positions, and just paying attention to detail, right? So yeah, really great stuff. Ellis Network is definitely something that we've been talking about strategically in our private community consistently. This was brought to our attention back, like I said, when the Vault originally had launched, and I think the TVL was sitting at like $2,500. Now it's upwards of 23,000. So we're definitely seeing some growth. The USDC Vault, I think when we first caught wind of this, was sitting at like 250,000. So that's increased over $250,000 since we paid attention to you guys. So this is really just great to see. And like I said, myself and Aqua have a private bet that this TVL in this XRP Vault by the end of the year is going to be similar, somewhat upwards of the USDC Vault. And that's just my personal opinion. As more XRP enthusiasts, people catch on to the fact that having dormant digital assets waiting for the next bull run is, non-comparable to somebody that has their assets sitting in cold storage. You look at somebody who has their assets sitting in cold storage. Yeah, I get the security mechanisms behind that, definitely more efficient, but you compare in terms of price appreciation or who's going to have a higher portfolio at the end of, let's say, a 6-month period, to somebody that's doing nothing with their assets versus somebody that's earning, 12% on XRP for the next 6 months. You guys can do that math, and who would probably come out on top with a better portfolio. Hisham, man, I really do appreciate your time. I just want to give a shout out and make sure everybody knows where to find you guys. So first, Ellis.network. This is their homepage. You guys can go tap in. You can directly access the document page from here. Highly suggest you guys go out there and read. We're not suggesting that anybody come out. At least I'm not suggesting anybody go out and test on this platform. Read the docs first. Educate yourself. Right? Understand what the platform offers before you assess your risk and decide whether or not to deploy on the platform. But at least go out there and just educate yourself, right? You don't need to risk your crypto to learn about a platform like this. There's so much information. Do you guys have a Discord as well, Hisham?
We do have a Discord.
Yeah, right.
It's just
Down at the bottom.
All one word. Mm-hmm.
Yep, down at the bottom, you guys can see all their tabs, all their links. So if you click down at the bottom, you got their Discord and their X profile. So right over here, you guys can give them a follow on X. You can see it's Ellis_network. So definitely go give them a follow on X. And then also, I don't have Hisham's X profile pulled up, but I think you do have one if I'm not mistaken. Yep, right here. Yep. All right, so give Hisham a follow. And he just said that he's open to answering any questions. I'm sure that he's a busy man, though, so give him some time to respond. But if you guys have anything for him and his team, definitely feel free to ask. Very communicative person. I really enjoyed this call, and I'm sure that all of our followers did as well. And then last but not least, got to give a shout out to the CYPRX Wealth 28 Club. If you guys are interested in learning how we are putting our digital assets to work, literally risking thousands of our own capital, in video breakdown, showing you guys how we're testing out these platforms. I'm sure that we're even going to go in and battle test Ellis Network with different strategies. We have a profitable mentor in our community that has sufficiently proven over the last year a rising equity curve via his lending and borrowing strategy in the DeFi ecosystem. We got Aqua and myself all battle testing these different DeFi protocols, mechanisms, different wallets, so on and so forth. You guys want to tap into that, head over to CYPRXtrading.com. We would love to have you on the Wealth 28 Club team. Outside of that, that is all I have today for you guys. Aqua, if you have anything else, man. And then if not, Asham, you guys want to say anything to the followers? Really do appreciate you guys for tapping in with us today. If you guys are watching this as a recording, I do ask that you do us a favor. You smash that thumbs up button and you subscribe. Over 2,000 people on the call today. So I really appreciate you guys for tapping in with us this Friday.
Yeah, thank you so much for having me today. I really enjoyed this experience. I hope we get to do it again in the future. Love what you guys do for the space in terms of like education and helping people kind of create, have opportunity. I think that's really, really important, and it speaks volumes to, the altruistic, kind of mindset that you guys have, wanting to see people succeed, right? And the best thing that you can do for somebody is provide opportunity and let them, kind of like be the very best that they can be, and then have them feel the satisfaction of self-achievement. So all those things are really, really fantastic. And honestly, that journey is so much more important than the actual financial gain, because what it does is it allows you to feel accomplished. So to the users out there, I'm super, super grateful for those of you who've had a chance to check out Ellis Network. For those of you who've given us your feedback already, I look forward to more feedback. And I want you guys to stay optimistic. I know this is going to be a tough ride up and down, regardless of what you're invested in or what your expectations are. Just remember, this is a 10, 20-year evolution, and you will be very satisfied, very proud of the fact that you've been an early pioneer in this space. So I look forward to doing this journey with you guys.
I couldn't agree more. Aquaman, go ahead.
Yeah, thank you. Thank you so much. Not financial advice. I have to say, this whole conversation has made me extremely bullish on the Ellis token. Again, not financial advice. But yeah, an absolute pleasure to have you up here today, giving us a chance to ask you these questions that I know the community wanted to hear on some of them. So thank you so much for your time. It's been an amazing time. So yeah.
Yeah, definitely look forward to it. I'll hold you accountable to, possibly coming back onto the call maybe in a couple of months as you guys continue to grow and develop, and we'll retouch maybe towards the end of this year and have you on another call, man. We really do appreciate your time. Thank you so much.
Thank you. I appreciate that. Looking forward to it.
All right,
Cheers,
brother.
guys.
I'm going to end the stream, and then if you want to stick around for a little bit, Hasham, then we'll go from there. Everybody, blessings to you guys. Thank you guys so much for tapping in with us, and we'll see you guys next Friday.
Much love.